I gotta be honest with you. I didn't really feel like doing this video again because I know I had talked about this before. And for some reason, I was going through my Facebook and I couldn't find it. So maybe, I don't know, did I either forget to upload it or maybe it was somehow taken down? I'm not sure. I don't know. But I'm recording this and I'm putting this on Facebook and YouTube. Somebody's got to educate the public. So, uh, so yeah, let's do this again. Now, I'm here to give you the key points, fast facts, and the benefits of this thing called the Consumer Financial Protection Bureau. Now, here are the key points. It was created in 2010 under the Dodd-Frank Wall Street Reform and Consumer Protection Act under the Obama administration. Democratic Senator Elizabeth Warren was actually the leading voice in championing for it. Mission: protect consumers in financial markets by enforcing consumer protection laws. Regulatory authority: supervises banks, credit unions, mortgage lenders, payday lenders, debt collectors, credit reporting agencies, and other financial institutions. Funding: independent agency funded by the Federal Reserve to reduce political influence. Skills. Leadership: directed by a single director appointed by the president and confirmed by the Senate. Here are some fast facts. It enforces laws against predatory lending, unfair banking practices, and abusive financial products. It created Know Before You Owe mortgage disclosure forms to help consumers understand loan terms. It oversees credit card, auto loan, and student loan practices to ensure fairness. It investigates scams, fraud, and deceptive financial schemes. So basically, they're like the anti scam police. It provides consumer education and handles complaints about financial institutions. Now, here are the benefits to consumers. It holds financial institutions accountable for unethical practices. It protects consumers from predatory lending, like payday loans, subprime mortgages. It ensures fair and transparent lending practices, reducing hidden fees and misleading terms. It helps resolve disputes between consumers and financial companies. It provides financial education tools to help consumers make informed decisions. It supports enforcement actions that return billions of dollars in refunds and relief to wronged consumers. So again, that was a fact that I had read before that the Consumer Financial Protection Bureau had returned billions of dollars to defrauded Americans. And when you know who got elected in 2016, he gutted that. Now, President Biden had brought it back. Unfortunately, it was only temporary because you know who got back into office and gutted it again. So thanks a lot, 70 something million Americans. And thanks a lot, stupid media, for helping to get this guy back in the White House. CNN and MSNBC, they're such failures, but I'll talk about that in another video. Now, getting rid of the Consumer Financial Protection Bureau under Trump's administration is seen as a major setback for consumer rights, financial fairness, and economic protection for middle class and low income Americans. Here's a breakdown of why. There's five, six, seven. So there's seven things. Number one, weakening consumer protections. The CFPB was created after the 2008 financial crisis to prevent banks and lenders from taking advantage of consumers with predatory lending, hidden fees, and deceptive financial products. Eliminating or weakening this bureau would remove critical protections, allowing corporations and banks to engage in risky and unfair practices without oversight. Trump's CFPB rollbacks made it easier for payday lenders, debt collectors, and banks to trap consumers in cycles of debt with unfair fees and high interest rates. Number two, helping Wall Street and big banks at the expense of regular people. Trump's efforts to defund and defang the CFPB benefited big banks, predatory lenders, and Wall Street executives while hurting working class Americans. The CFPB was created to hold financial institutions accountable for fraud and abuse, such as the Wells Fargo fake account scandal. Weakening the CFPB gives corporations a green light to exploit consumers without fear of consequence. Less regulation on banks means higher chances of financial crises that disproportionately harm working families, not the ultra wealthy. Number three, harming middle class and low income Americans. The CFPB ensures fair lending practices, protecting people from predatory payday loans, racial discrimination in mortgage lending, and hidden credit card fees. Trump's push to reduce the CFPB enforcement led to fewer investigations into financial scams that target the poor, seniors, students, and communities of color. Without CFPB protections, low income borrowers are more vulnerable to getting trapped in cycles of debt by unethical lenders. Number four, removing accountability for corporate misconduct. The CFPB has returned over $16 billion to consumers who were scammed or overcharged by banks, payday lenders, student loan servicers, and credit card companies. Trump's efforts to gut the agency meant that companies that break the law face fewer consequences. This creates an imbalance of power where corporations can exploit workers, students, and struggling families with impunity. Number five, hurting student borrowers. One of Trump's biggest rollbacks was removing protections for student borrowers, making it easier for loan servicers to mislead students, charge unfair fees, and make it harder to repay debt. The CFPB played a key role in holding student loan companies accountable for fraudulent practices, and Trump's efforts to dismantle it allowed lenders to exploit student debt holders freely. Number six, making it easier for discriminatory lending. The CFPB actively fights against racial discrimination in home loans, car loans, and credit access. Trump's weakening of CFPB's fair lending enforcement made it easier for banks and mortgage lenders to charge higher interest rates to Black, Latino, and low-income borrowers, widening racial wealth gaps. Removing the CFPB meant fewer investigations into discriminatory. Why can't I talk right now? Let me try that again. Removing the CFPB meant fewer investigations into discriminatory financial practices that disproportionately harm marginalized communities. Number seven, prioritizing corporations over consumers. The Trump administration consistently sided with corporate interests over consumer rights. The CFPB was designed to be independent from political influence so it could prioritize protecting everyday Americans, but Trump appointed industry friendly lenders who undermined its mission. A weak CFPB means corporate profits rise at the expense of working people who face higher fees, deceptive loans, and financial fraud. In conclusion, why getting rid of the CFPB is bad. It hurts middle class and low income Americans by removing protections against financial exploitation. It benefits Wall Street, big banks, and payday lenders while ordinary people get trapped in debt. It allows unchecked corporate misconduct, making it easier for companies to commit fraud without consequences. It harms student borrowers and mortgage holders by letting lenders impose unfair fees and restrictions. It increases racial and economic equality by making discrimination in lending harder to fight. It removes accountability for financial crises, making another 2008 style meltdown more likely. Now, Trump era rollbacks that weakened the Consumer Financial Protection Bureau and hurt consumers. During Trump's presidency, his administration took multiple actions to weaken the CFPB, making it easier for banks, payday lenders, debt collectors, and corporations to exploit consumers. Below are specific Trump era rollbacks that hurt working class Americans, students, homeowners, and people in debt. Let me see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So there's 10 things here. Number one, rollback. So there's 10, hold up a second. So there are 10 rollbacks, and under each one, it tells you the impact and who got hurt. So number one, the rollback in 2019, gutted payday lending protections. In 2019, the Trump administration eliminated the ability to repay rule, which required payday lenders to verify that borrowers could afford to repay loans before issuing them. The impact is it allowed predatory payday lenders to trap people in high interest loans. You're talking 3 to 400% APR, leading to cycles of long term debt. Who got hurt? Low income borrowers, especially in Black and Latino communities who rely on payday loans in emergencies. Number two, it weakened oversight of student loan companies. The rollback was Trump's education department under Betsy DeVos stopped cooperating with the CFPB, limiting its ability to investigate and punish predatory student loan servicers. Now, before I continue with that, here's a fact. Uh, Betsy DeVos is somebody who, her and most, if not all, her family is they're all for private schools. They're against public education, and yet Trump chose her to lead the education department, and it's no wonder why he said, "quote unquote," "I love the poorly educated." So again, if you think that Hillary or Bernie would have done that, you're absolutely out of your blanking mind. Now, The impact is it allowed loan servicers to mislead borrowers. I'm not gonna lie, I really don't like that word because it's kind of hard to say. Charge unfair fees and withhold repayment options, making it harder for students to repay loans. Who got hurt? Millions of student borrowers who were misled or overcharged. Number three, it allowed banks to charge hidden and junk fees. Rollback. The Trump CFPB reduced enforcement of fair lending laws that prevented banks from hiding fees, raising overdraft charges, and misleading consumers. The impact was that banks made billions of dollars from overdraft fees, charging up to $35 per transaction when consumers unknowingly went over their balance. Who got hurt? Working class Americans who live paycheck to paycheck and are vulnerable to unexpected fees. Number four, it stopped investigating bank fraud and scandals. Funny enough, Trump was found liable for bank fraud. Go figure, right? Rollback. Trump's CFPB ended aggressive investigations into financial institutions, including Wells Fargo, which was caught fraudulently opening millions of fake accounts. The impact was banks faced fewer penalties for scamming consumers, lying about fees, and illegally foreclosing on homes. Who got hurt? Regular consumers who lost money due to fraud and had no agency to fight back. Number five, made it harder to sue banks and lenders. Rollback. In 2017, Trump blocked a CFPB rule that would have banned forced arbitration, a legal trick used by corporations to prevent customers from suing them. Gee, wonder why they would do that. Impact. Banks, credit card companies, and payday lenders could now force consumers into rigged arbitration processes instead of allowing them to sue in court. Who got hurt? Victims of bank fraud, loan scams, and abusive debt collection tactics who couldn't take legal action. And this was supposed to be the law and order president, huh? But number six, stopped tracking discriminatory lending practices. The rollback was Trump's CFPB weakened fair lending rules, allowing mortgage lenders and banks to report less data about who they approve and deny loans to. The impact is it made it harder to detect racial and gender discrimination in lending, meaning minority borrowers were more likely to be charged higher interest rates. Who got hurt? Black, Latino, and female borrowers who already face higher mortgage costs than white men. Number seven, rollback. In 2020, his CFPB relaxed rules on debt collectors, allowing them to call consumers up to 7 times per week per debt, and also allowed them to send unlimited texts and emails demanding payments. The impact is it opened the door for harassment and abuse by aggressive debt collection agencies. Who got hurt? Low income Americans, especially those with medical debt who were already struggling financially. Number eight, it allowed more foreclosures and evictions. The rollback was the Trump administration weakened mortgage protection that required lenders to work with struggling homeowners before foreclosing on them. The impact made it easier for banks to evict families instead of offering loan modifications or assistance. Who got hurt? Homeowners facing financial hardship, especially during the COVID pandemic. Number nine, reduced CFPB's independence and funding. Rollback. Trump appointed industry friendly leaders who worked to limit the CFPB's authority and reduce its funding. The impact is the CFPB investigations dropped by 80%, meaning fewer cases against banks, payday lenders, and student loan servicers. Who got hurt? Everyday Americans who needed protection from financial fraud and corporate abuse. And number 10, stopped protecting military families from financial scams. Rollback. Trump's CFPB stopped routine examinations of banks and lenders targeting active duty military members and vets. Impact. It allowed shady lenders to scam military families with high interest auto loans, payday loans, and mortgage fraud. Who got hurt? Veterans, service members, many of whom fell into debt traps. The bottom line is the Trump administration's rollbacks protected banks, lenders, and corporations instead of everyday Americans. The rollbacks made it easier for financial companies to scam and overcharge people. They eliminated key protections for student borrowers, homeowners, and military families. They let payday lenders and debt collectors harass consumers. They increased economic inequality by removing safeguards for middle class and low income people. The CFPB was created to prevent another 2008 financial crisis, and Trump's actions made it more likely that corporate greed could once again devastate working families. Now, detailed breakdown of the rollbacks and their consequences. The Trump administration significantly weakened the CFPB in multiple ways, benefiting big banks, payday lenders, debt collectors, and financial corporations at the expense of everyday Americans. Wait, hold up a second. Did they do the same thing twice right here? It's the consequences. So, who benefited as a result of gutted payday lending protections? Payday lenders who made billions in profits off of desperate borrowers. Working class Americans who got stuck in endless debt cycles, they were screwed by it. So, okay, so it's kind of repeating that right there in many ways. Again, everyday Americans got screwed while banks like Wells Fargo, Bank of America, they profited off of hidden fees. Let me scroll down a little bit more, a little bit more. Oh, wait, here's an interesting one. Reduced CFPB's independence and funding. What Trump did was he appointed a guy by the name of Mick Mulvaney to lead the agency. Mick Mulvaney is a known opponent of the CFPB. You know what? That doesn't surprise me at all because here's the thing. So, for every, I would say a lot of the departments, if not every single department, for every person that Trump has put in charge of a particular department, that person has been known to be against that department. So, for example, Betsy DeVos is against public education. She's leading the public education department. I mean, she's not right now, but she did under his first term. I'm actually surprised that he didn't bring her back because she was like one of the few people in the White House that still stayed loyal to him. And to the best of my knowledge, she never got on his bad side because he never said anything public about her that was negative. He never attacked her, but it's whatever. Um, what was the other thing I was going to say? Oh, there's a guy by the name of Scott Pruitt. Scott Pruitt was put in charge of uh, the Environmental Protection Agency, and this is a guy who's actively known for being against environmental protection. As a matter of fact, he sued the EPA in the past twice. Look that up. I'm not making that up. There's another department I'm thinking of that I can't. There was something else that somebody put in charge of something. I'm kind of blanking on it at the moment. If it comes to me, I'll say it later in this video, or I'll talk about it in another video or whatever. But let me scroll down a little bit. Elizabeth Warren was apparently the leading voice in championing for the CFPB. Break this down. Elizabeth Warren, the leading voice behind the CFPB. Elizabeth Warren, Democrat in Massachusetts, Democratic senator in Massachusetts, was the driving force behind the creation of the Consumer Financial Protection Bureau. Her advocacy for consumer protection and Wall Street accountability led to the establishment of the CFPB in 2010 during the time that Obama was president. Now, here's a breakdown of her role and why she fought so hard for it. And there are 6 things, excuse me. Warren's background in consumer advocacy. Before becoming a U.S. Senator, Elizabeth Warren was a Harvard law professor specializing in bankruptcy and financial law. She spent decades researching and exposing how banks, credit card companies, and predatory lenders exploited consumers, especially working class families. Her research showed that banks used deceptive practices, hidden fees, and predatory loans to trap Americans in cycles of debt. Key findings from her research: 1. Medical debt and predatory loans were major causes of bankruptcy. 2. Banks made billions off misleading contracts and hidden fees, and Wall Street's greed and deregulation led to the 2008 financial crisis. Her work laid the foundation of the CFPB by proving that consumers needed a watchdog to hold banks and lenders accountable. Number 2, the 2008 financial crisis and the push for reform. The 2008 financial crisis devastated millions of Americans, leading to massive home foreclosures, job losses, and economic collapse. Big banks engaged in risky subprime lending, misleading borrowers, and selling toxic mortgage backed securities. The collapse of Lehman Brothers, AIG, and other financial institutions exposed how Wall Street's greed and deregulation harmed working people. Warren's response: she warned that without reform, Wall Street could continue to exploit consumers. She advocated for a government agency dedicated to protecting people from financial fraud. She became a leading advisor to the Obama administration on consumer protection issues. 3. The creation of the CFPB. In 2010, she proposed the idea of the CFPB, arguing that consumers needed a financial watchdog, just like they had agencies protecting food safety, drugs, and the environment. The Dodd-Frank Wall Street Reform and Consumer Protection Act, signed into law by President Obama in July of 2010, officially created the CFPB. That was one of Obama's biggest accomplishments, and to Warren's credit, one of her biggest accomplishments too. And that's why I really like her as a senator, and is 9 times out of 10, or nearly 10 times out of 10, on the right side of the issues. Her role in shaping the CFPB. She designed the structure of the agency to be independent from political interference. She pushed for strong enforcement powers against banks, payday lenders, and credit card companies. She created new transparency rules for mortgages, loans, and credit cards to prevent deceptive practices. Now, number 4, why she didn't become the first CFPB director. Warren was the logical choice to lead the CFPB, but Republicans and Wall Street lobbyists opposed her nomination. Shocker. Big banks feared Warren because she wouldn't back down from regulating them. Senate Republicans blocked her appointment, leading Obama to nominate Richard Cordray instead. Warren later ran for Senate in 2012 and luckily and thankfully won and continuing to fight for consumer protections. Number 5, why she fought for the CFPB. She saw the CFPB as the key to preventing another financial meltdown and protecting working class Americans from being scammed by big banks, credit card companies, and payday lenders. The CFPB's core mission, from her vision, to hold banks accountable for fraud and deceptive practices, to stop payday lenders from trapping people in cycles of debt, to ensure fair lending for home buyers, students, and small businesses, to protect military families and veterans from financial scams, to give consumers an agency that actually fights for them rather than for Wall Street. Number 6, how Trump and Republicans targeted the CFPB. Big banks and payday lenders hated the CFPB because it cut into their profits. Trump and Republican lawmakers worked to dismantle it, seeing it as Warren's creation and an obstacle to deregulation. Trump's appointee, Mick Mulvaney, worked to defund and weaken the agency, slashing enforcement actions by 80%. Her response? She fought to expose Trump's attacks on the CFPB and called out his administration for siding with Wall Street. She pushed for restoring the agency's power under President Biden's administration, and she continues to push for stronger consumer protections and corporate accountability. Now, here's a list of specific CFPB victories under Elizabeth Warren's leadership. There are 8, 9, 10 things. Oh, yeah. Number 1, crackdown on Wells Fargo's fake account scandal 2016 and 2022. The issue is Wells Fargo illegally created millions of fake bank accounts in customers' names without their permission, charging bogus fees. The action is the CFPB action means they fined Wells Fargo $100 million in 2016 and then later hit them with a record breaking $3.7 billion fine in 2022 for continued financial misconduct. The impact is it forced banks to clean up deceptive sales practices and gave consumers their money back. Now, again, so just based on that description alone, to all these 70 something, whatever million number of people that voted for this guy because they said he's looking out for us, well, it says right there that she fought, that the Democrats were the ones who fought to make it so that this agency would fight the banks who screwed people off, who basically ripped people off and screwed them over. And as a result of Warren and Obama's leadership, they got their money back. And Trump went in there and he took that away. And so, how is that showing that he's on the side of the people? Again, it still kills me. It kills me. It murders me to know that there are people, plenty of people, who still think that this guy is any different than any other average Republican. He's not any different than Bush or Cheney. He's not any different than McConnell or Rick Scott or Scott Walker or any of these other Republicans. Like, he's just not any different. He is those people. He is a Newt Gingrich. He is a Reagan. He is a Nixon. He is a Gerald Ford. Like, he is these people. That's not debatable. That's a fact, and it's not up for discussion. It's just not. So, again, I fault the many people who voted for him, and I also fault the media for focusing more on Kamala's book than they did her policies. Goodness gracious. The victory for consumers is banks can no longer open fake accounts or charge hidden fees without consequences. Well, guess what? Now that Trump's back in office and now that the Republicans have the White House, Congress, Senate, and Supreme Court, they can now. And you best believe, you damn well know they're going to do it again. You can bet they're going to do that again. Number two, they recovered over $16 billion for defrauded consumers. Since its creation, the CFPB has returned over $16 billion to consumers from bank fraud, illegal fees, and financial scams. It handled over 4 million consumer complaints against banks, credit card companies, and debt collectors. The victory for consumers was that people got refunds, lower fees, and more protections against financial fraud. Now, there's also a lot of stuff here, though. So some of this I'm going to skip because some of this is kind of repetitive. But there was something down about Biden. Now, here's some details as to how President Biden and his CFPB fought back against Trump era rollbacks. How Biden's CFPB, it says is, but it really was because, unfortunately, he's not the president now. But, this was like they're speaking from the perspective as though this is still, you know, anywhere between the years of 2021 to 2024, because those were the years Biden was president, obviously. But how President Biden's CFPB is fighting back against Trump era rollback protections. Let me see. Under Trump, the CFPB was weakened, defunded, and stripped of key enforcement powers, allowing big banks, payday lenders, student loan servicers, and debt collectors to exploit consumers more freely. Since Joe Biden took office in January of 2021, his administration has worked aggressively to restore and expand the CFPB's power. Below are the key ways that Biden's CFPB is reversing Trump era rollbacks and strengthening consumer protections. One, two, three, four, five, six, seven, eight. So here are eight things here. It's going to get under each one, it tells you what Trump did and what Biden did and the victory for consumers. Number one, cracking down on junk fees. What Trump did was he allowed the banks, credit card companies, and financial institutions to charge hidden overdraft fees, late fees, and service fees with little oversight. What President Biden did was in 2022, the CFPB launched an initiative to eliminate junk fees targeting overdraft fees, credit card late fees, and bank account maintenance fees. The new CFPB rules cap late fees at $8 instead of $35, saving Americans billions of dollars per year. So here's the thing, that saves Americans money right there. And so you got Trump and Elon and the stupid Republicans talking about wasteful spending and fighting back against fraud. Well, what did Doge do? Doge cut this right here. So again, people, I don't want to hear it. I don't care what you have to say about it. I don't give a damn what your defense is. I do not want to hear it. It's BS, and you know it's BS. He did, again, Trump and the Republicans did that for no good reason. I need more Democrats, liberals, and leftists to stand up and grow a pair and just understand you're not going to sit there and BS me with this whole thing, with every single thing that they do always has two sides to it. There's a good and a bad to it. Everything that Trump did with this agency, it was just all bad. It just was all bad, and nothing good came out of it, unless you are somebody who is, unless you work for Wall Street or you work for these industries that they're talking about here. Yeah, it was good for you. Yeah, it was good for the payday lenders. Yeah, it was good for the credit card companies. But if you're an average American who doesn't make but what, $50,000 a year or less, 40,000 or less, how did this benefit you? It didn't. There's no answer to that because you know it didn't. And the whole administration, again, Trump's both terms. He's proven to be a worse president than even Bush. But let me go on here. The victory for consumers is that banks can no longer silently drain money from people's accounts with hidden charges. Number two, restoring oversight of payday lenders. What Trump did was he allowed the CFPB, his CFPB repealed the ability to repay rule, allowing payday lenders to trap low income borrowers in cycles of debt with 400% plus interest loans. What President Biden did was in 2023, the CFPB reintroduced stricter rules on payday lenders, requiring stronger affordability checks before issuing loans, requiring limits on how many times a loan can be rolled over. Also, cracked down on illegal auto title loans, which tricked borrowers into using their cars as collateral for unfair, high interest loans. The victory for low income Americans was the predatory lenders can't trap people in endless debt cycles as easily. Number three, holding student loan companies accountable. What Trump did was his education department cut CFPB oversight of student loan servicers, leading to misleading loan terms and unfair repayment options. Navient and other, is it Navient or Navient? I don't know. I've only seen that word written. I haven't heard it pronounced, but it's whatever. And other servicers got away with steering borrowers into bad repayment plans. What President Biden did was he fined Navient $1.8 billion for fraudulent student loan servicing. The CFPB forced loan servicers to provide better repayment options, expanded public service loan forgiveness, and targeted debt relief programs. Here's the victory for the student debt recipients. Loan servicers face real penalties for misleading borrowers. Number 4, investigating racial discrimination in lending. Again, Trump allowed his CFPB to racially discriminate, and what President Biden did was his CFPB restored the Office of Fair Lending in 2022, strengthening investigations into discriminatory banking practices. In 2023, the CFPB fined Citibank, Wells Fargo, and Toyota Motor Credit for racial bias in auto loans and mortgages. The victory for racial justice: banks are being forced to treat all borrowers fairly. Now, this is the part where Republicans and the elitists and the billionaires complain, they're being treated fairly. Well, this is screwing us over. First of all, it's not screwing you over. You're just nothing but, um, I can't really think of anything clean to say, but just say you're greedy and you're a bad person. I'm sure some people could think of some stuff and you know what goes on in my head. But so what? And even if it does screw them over, we don't care because look at how many people you screwed over. Millions of Americans got screwed over as a result of Trump's actions. So, number 5, protecting military families from predatory lending. What President Biden did, I'm just going to skip all the stuff that Trump did because we already know everything that he did. So, I'm just going to give you the good things that President Biden did regarding this policy. Number 5, President Biden's CFPB reinstated military financial protections and reintroduced routine audits of financial institutions. They recovered over $200 million for veterans and military families. The victory for military families is stronger protections from loan scams and predatory lenders. Number 6, making mortgage lending more transparent. What President Biden did was he restored mortgage reporting requirements to ensure fair lending. And his administration also required banks to disclose more data on loan terms and interest rates. The victory for home buyers: less housing discrimination and fewer predatory mortgages. Number 7, restoring debt collection protections. What President Biden did was his CFPB in 2022 introduced stronger limits on debt collection harassment, stopped aggressive collection practices that targeted low income Americans. The victory for debt holders: debt collectors face stricter limits on harassment. And number 8, strengthening independence. President Biden appointed pro consumer CFPB Director Rohit Chopra. Rohit Chopra. I don't know. I know I butchered that name. I'm sorry, but to all you people that paid attention and followed President Biden and his accomplishments, I mean, you must know who this person is, and so you know what I'm talking about. President Biden increased funding for investigations, and his CFPB enforcement actions are back at record levels, ensuring banks and lenders are held accountable. The victory for consumers is the CFPB is stronger and more active than ever. Now, here are the final takeaways. President Biden's CFPB is undoing the disastrous Trump era rollbacks that allowed big banks and payday lenders to exploit consumers. They have stronger rules on payday loans, student debt, mortgage transparency, and racial discrimination. The stronger rules are back in place for those things. Debt collectors, banks, and loan servicers face renewed oversight and tougher penalties. The CFPB is returning billions of dollars to consumers who were overcharged or scammed. Elizabeth Warren's vision for the CFPB is being restored under President Biden, making it once again a powerful watchdog protecting everyday Americans. And guess what? The people decided to foolishly put a Republican back in office, and all that stuff is gone now. Now it's down the toilet. So, um, so guys, all I'm saying is this: whoever the next Democrat is to run for president, like, listen, I'm guessing that we're probably going to have at least 10 Democrats running for president next time. I'm sure there's going to be men and women, and I would gladly support almost any of them, but we know how America is. America's still sexist and misogynist, and they don't want a woman president. We know that because we ran two competent, intelligent women, and America rejected both of them. So, um, but let's just say for the sake of the argument, I don't know who all's running for president next time. Gavin Newsom, Gretchen Whitmer, J.B. Pritzker, Andy Bashir, Ned Lamont. I can't think of the name of the guy who's the governor of North Carolina. His name is kind of at the tip of my tongue. You know who I'm talking about. But, AOC or Kamala Harris or Cory Booker, any of you, if you're running for president, you have to run on bringing that back. And you have to tell people in independent states and swing states, independent voters in the swing states, you're campaigning on, I'm bringing this back because they are not allowed to do this to you. And the reason why you got screwed again is because this current disastrous, catastrophic, and embarrassingly incompetent administration allowed it to happen. So, this is what all Democrats need to be talking about. Not to say it's the only thing you should talk about, but it is something that should be brought to the light a little more. And again, I wish more people knew about this. I wish more people complained about this. And I hope we get a Democrat as president again in 2028 so we can fix a lot of this because there is a lot of garbage to clean up. I mean, a lot. A lot. I mean, goodness gracious, I thought Obama had a lot to clean up after Bush. Goodness gracious, we're going to have 3 or 4 consecutive Democratic administrations to clean up all the garbage that we've seen since January of 2025. It's going to take a lot. Now, this video went on a little bit longer than I thought. Sorry about that, folks. But look, if you're watching this on Facebook, the link to my YouTube is in the comment section below. And go to my About section and you'll see the links to my Twitter, TikTok, Blue Sky, Instagram, and is that it? I think that's it. Yeah. So you're watching this, and if you're watching it on YouTube, those same links are in the About section in I'm sorry, I can't talk right now. If you're watching this on YouTube, please subscribe to me and go to my About section. You'll see the links to the things that I just listed: Facebook, Twitter, TikTok, Instagram, Blue Sky. It's all there. So I got a lot more videos to release here. I will keep you all posted, informed, and educated because somebody's got to. So stay tuned.